Hey, welcome to the Guaranteed Retirement Guy show. So today I want to talk to you about what percentage of your portfolio should be in annuities. So when I talk to people, typically they'll look at their assets and they'll say, well, I don't want to put all of this into an annuity. Do I have to put all of this into an annuity? And my answer always is absolutely not. In fact, insurance companies will not take all of your assets. They require that you have a certain amount on hand in emergencies. So if something happens, you can access that instead of having to go to your annuity and try to access it through there. And some annuities can have some hefty surrender charges, and you don't want to be paying those if you put all your money into it. So typically, the highest percentage that you want to put into annuities out of your assets, typically no more than 75% of your total liquid assets. So if you have $1 million, you cannot put more than $750,000 into annuity contracts. And that's just across the board. If you put some in fixed annuities, some in index annuities, the combined total should not be more than 75%. So again, it just goes back to the reasoning that insurance companies want to make sure you have enough in emergency savings so that if you need to access that money for any reason, you don't have to go to your annuity to try to take it out, because they're trying to protect you. They're trying to do the best thing for you as well, because they don't want someone to try to sucker you into buying an annuity with all of your money and then not having anything available for an emergency. So another thing to remember is if you are under 59 and a half, insurance companies they don't look at your current 401k. Like if you have a 401k with an employer, so it's an employer sponsored plan where you can't access it till 59 and a half. Typically, they won't let you transfer it unless you sever employment. Well, if you are currently employed and you have a 401k, then typically that is not seen as liquid, because they know you will be penalized if you were to try to take it out first because of the IRS, but they also know that the employer won't typically allow you to actually get access to that cash until after 59 and a half. So remember that as well. So if you are before 59 and a half and you want to put money into annuities, okay, and if you have an old 401k, then great, or an IRA, great. You can put that money into an annuity. They just want to make sure that if you've got all of your money into a current 401k and all of your money into an old 401k, or half of it into an old 401k, then they're only going to accept a portion of that old 401k, unless, of course, you have cash savings on hand, because they're not going to look at your current 401k because you're under 59 and a half. They won't look at that as far as emergency savings or being as liquid as you might think it is. And so they're going to want to see some extra cash on hand if you're going to roll the entire amount of your other IRA accounts or old 401k or 403b or any other type of employer-sponsored plan. So just remember that. If you have a $250,000 sitting in your current 401k and that's your current employer and you're under 59 and a half, you can't typically get access to that. If you have an old 401k over here and that's got $250,000 in, you can put all of that into an IRA with an annuity inside of it if you have some extra cash or other type of liquid, maybe a brokerage or anything else, maybe even a more liquid life insurance policy. They will take all of that into an account. So you just want to make sure that whenever you invest into an annuity, make sure that your total annuities as far as portfolio percentage is 75% or lower. Okay. If you do that, you're usually safe. You'll usually be approved. If you're higher than that, it's usually hard to get approved. You'll submit an application and suitability might reject you just because they want to see more liquid assets. Or they might say, hey, we'll take you, but you have to put less in here because we want to make sure you have access to a little bit more cash just in case something would happen. So anyways, keep that in mind. If you want me to look at these numbers for you and kind of go into some specifics and maybe customize something for you personally, then please get on my calendar. You'll notice that there is a link below this video. It's connected directly to my calendar. You can also watch the video if you'd like, and then that will send you to my calendar as well. But anyways, happy to help you answer your questions and set you up in a customized annuity strategy that works for you. So anyways, thanks for watching, and I look forward to seeing you in the next video.